Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Sedan. This week, we're covering some temporary relief for reporting certain digital asset transactions. Sign up for Spiedel's quarterly federal tax update webinar, and you'll get reliable and pertinent updates on trending tax topics. Get details on this subscription webinar series and register for a full year of updates or just a single session at spiedel.com under webinars. The IRS has issued Notice 2025-7 that allows digital asset or crypto investors who trade through a broker to use one of two alternate methods to make an adequate identification of digital assets sold during 2025 for the purposes of reporting these transactions. For digital assets held in the custody of a taxpayer's broker, the existing regulations generally allow taxpayers to make an adequate identification of the units to be sold, disposed of, or transferred by specifying that information to the custodial broker no later than the date and time of the sale or other disposition. Taxpayers can do this by reference to any identifier that the broker designates as sufficiently specific to allow the broker to determine the unit's basis and holding period. Taxpayers can also make an adequate identification by using a standing order or instruction communicated to their broker, for example, an order to sell units using the last in, first out method. If a taxpayer fails to make an adequate identification of units sold through a broker, the default rule is that the first in, first out method of identification is required to be used. Using specific identification of digital assets allows taxpayers to sell the assets that have the highest basis first and therefore minimize their taxable gain. With assets that have a lot of unrealized gain, like digital assets that were purchased when values were very low, specifically identifying later acquired higher cost assets as the ones being sold today can drastically reduce taxable gain. The same rule works in reverse for taxpayers who may want to recognize more gain today. In Notice 2025-7, the IRS recognizes that many digital asset brokers don't have systems in place to track a taxpayer's specific identification of assets sold. So for digital assets sold during the 2025 calendar year, the notice provides temporary relief by allowing taxpayers to make an adequate identification by either identifying the assets in the taxpayer's own books and records by reference to any identifier, like the purchase date and time or the purchase price for the unit sold, that's sufficient to identify the basis and holding period of the digital assets sold, or recording a standing order on the taxpayer's own books and records, for example, an email to their broker. But the recorded standing order needs to include sufficient information to identify any digital asset units sold. To qualify for relief, the taxpayer needs to make the identification using either of these methods prior to the time of sale, disposition, or transfer. For digital assets not held by a broker, the regulations provide separate ordering rules for identifying which assets were sold or otherwise disposed of during the year. The temporary relief provided in Notice 2025-7 only applies to digital assets held in the custody of a broker that are sold, disposed of, or transferred between January 1st, 2025 and December 31st, 2025. Attend Spiedel's Federal Tax Update webinar on January 9th and 10th and be prepared for the upcoming filing season. This 8-hour course will cover everything that happened during the year, including the recent beneficial ownership reporting changes, the Federal Disaster Tax Relief Act, and everything you need to be prepared for tax season. See a list of topics covered and get registered at spiedel.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.